Welcome to the Real Estate Majlis podcast, where we dive into the latest real estate insights and trends. Whether you are a seasoned investor or a first-time buyer, our podcast is here to provide valuable information and expert advice. This episode is powered by Bayut, the UAE's leading property platform and proud member of the Dubizo Group. Whether you're buying, selling, or renting, Bayut connects you with real estate solutions tailored to your needs using innovative tools like TrueCheck, TrueEstimate, TrueBroker, and Bayut GPT. From finding your next home to advertising your listings with confidence, Bayut offers real photos, real prices, and real properties, helping you make informed decisions in the market. So welcome to yet another episode of the Real Estate Majlis podcast. I'm Cecilia and I have my co-host Mahmoud. And today we're going to talk development. Today we have the Chief Development Officer with us from Deyaar, Patrick Rouse. Welcome.
Thank you very much. It's a pleasure to be here.
So Patrick, let's talk a little bit about the competitive landscape we have in Dubai. Launches pretty much every week. How Deyaar is positioned themselves differently? What's the outlook for the next 12 months?
Dubai is a very competitive landscape, and that's something that the city actually thrives on, and we also thrive on it. Our competitive advantage, I believe, is our legacy. Deyaar is established since 2002, and we've got a lot of high quality projects that we've delivered over time. We've been through both, I think, the good times and the bad times of the Dubai real estate market, and we've built a trust with our customers, and we're continuing to build on that and leverage that. I think competition in the market is a healthy environment. I think there's a lot of good competitors out there, but I think you shouldn't look left and right too much. You can focus on other people and what they're doing, but you really got to focus on what's your differentiator, what's your customer base, and what can you do to build on the legacy that we've already created within the business. So we're looking to expand in the UAE. We're looking to develop out the rest of our land bank in Dubai in particular, and also exploring other opportunities in other Emirates. Last year we had our first launch in Abu Dhabi, and we're looking at some other opportunities there, and we're also looking at other opportunities in Quain. But Dubai has been our main focus over the years, and will continue to be. In differentiation, again going back to our legacy and going back to really focusing on what the customer segment that we're focused on, and then what the different elements that we can offer as a long-term developer. So we're really customer centric. We're very focused on our amenities, our communities, with having our own property management company, our own facility management company. We ensure a long-term success of our developments, and we ensure that we get continuing feedback from the customers of what works in the community and how we can continue to enhance that, and what the current market trends are that we reinforce.
As a Chief Development Officer of Deyaar, you're responsible for turning customers' dreams into reality. So what kind of trends you see that customers want, and how you transform this into reality?
The customers in the Dubai market have become a lot more sophisticated. You know, as the market has matured, there's a lot more sophistication there, and there's a lot more demand, which is positive. You know, the customers are both long-term investors, and they're also long-term residents here. So you're catering for two different segments. One in the investor that will ensure capital appreciation, and that he will be able to get his returns. And you can only do that by maintaining the community well, having positive feedback from the residents, and making the rental demand positive in that building. In the long-term resident, you want to ensure that you're creating a community feel. And I think primarily since COVID, the demand of what people want, the long-term residency of Dubai, has increased. And so customers are staying for longer. They're potentially looking to settle here for the rest of their lives. You know, the idea of Dubai has changed a lot since COVID, in that the government has brought a lot of initiatives that are allowing people to look more of a long-term stay here. And so their demands as a resident are changing. You know, they're looking for more villa communities, they're looking for, in the towers they're in, and the office blocks, and where they work, everything is about wellness, everything is about lifestyle, everything is about easy access. You know, they want to be close to work, they want to be close to a community, they want access to facilities, they want access to recreation, they want access to good retail. So I think the idea of the 15-minute city is starting to evolve in Dubai a bit more, And I think over time, Dubai will become a bit more area-centric. So people will look to the area where they can live, work. We see a lot more trends in the residential buildings where co-working spaces, shared amenities, and access to recreation and sporting facilities is a massive increase in Dubai at the moment across our customer base.
But the more amenities or services you provide, that has an impact on service charges, right?
Correct. Yes.
So how do you ensure you create a balance?
We plan from the start. So we engage with both our facilities management and our community management team that are in-house. And so we're able to leverage on their advice and their experiences so that obviously sales price is one thing that's attractive for customers, payment plans is attractive, the designs, the facilities, but also this comes at a cost. So ensuring that our long-term service charges are as small as possible is something we factor in immediately. So we're looking at efficient designs, efficient MEP systems. More and more people are looking at AI technology for maintenance and making sure that buildings are used to the maximum and as efficient as possible. So we're factoring a lot of those elements into our design. It's very important.
When it comes to supply and demand, where are we standing now?
There's been a sharp increase between 2023 and 2024 in the supply, and that continues over 25 and 26. But the demand is still there. We are still behind on the demand with both the population growth and the need for people to stay longer. That demand is sufficient at the moment that it will be there for a number of years. There's a number of initiatives the government have done to actually continue to draw people in. So I think our demand at the moment is still strong and we're still trying to catch up with the supply. There's a lot of off-sales plans in 22, 23 that come into play in 2025 and 6. And then there's a lot more off-plan that's going on at the moment. But we're still behind the demand.
What kind of categories of demand we're talking about? Affordable, luxury, family orientation?
I think it's across the market. And I think that's where you see the change in the Dubai market over the last 10, 15 years. It's a more sophisticated market, as I said, but also the demand is across all asset classes. We saw a big spike probably after COVID on luxury. But I think all of those asset classes you talked about, that demand is there because Dubai, with its new regulations, is trying to welcome more people in. So long-term visas, initiatives increasing freehold, particularly along Sheikh Zayed Road and Al Jadaf. We're bringing more and more customers into the market. So the demand is there on office space again. I think Dubai has been very, very, very good in continuing that demand. And one thing the government has always been ahead on is infrastructure. With the infrastructure there, it's able to cope with the demand. So I think all of those asset classes are continuing. Probably the one area where a little bit more focus maybe needed is on affordable housing. There's more budget-friendly areas have come to the market recently, but there's still a significant volume of people that probably commute into Dubai from the other Emirates because of its central location. But I think with the new 2040 vision, I think which is the 7th plan since 1960, the wider corridors are getting more filled up. Probably the plans of 2008 where it got on hold with the global financial crisis, they're now coming back into it. So out the Lane Road on the 611, the D54, you can see all those areas now really starting to fill up. And I think they're more villa communities, but you will then see other areas like Silicon Oasis fostering on probably education and office blocks that will start to support all the resident communities around there.
One big trend we are witnessing right now is sustainability. Most developers are using that word as part of their sales pitch. Some of them getting certified, fit well, and different levels of awards into their projects. But what does that mean to consumer, and what should they look for when they want to be part of the sustainability environment?
Sustainability is a very broad term.
Correct, yeah.
And it covers a lot of areas from both design, materials, service charges, maintenance of the building, and particularly focused on wellness and recreation. So I think everybody's attaching probably a slightly different meaning to it, and it's definitely an area that needs further enhancement and definition for the customer. I think the customers are getting more sophisticated, as I said, but probably they need to be a bit more demanding in the developers when they're using the sustainability buzzword. From our perspective, what we look at sustainability as, one is in long-term growth, that is a sustainable growth. We look at very much our design around the materials, but also efficiency in the systems. We have an in-house MEP team, and as I said, we leverage the information from our community management and facility management to focus on the maintenance of the systems, and also ensuring that maybe a bit more upfront cost ensures a better longevity for the building and an easier to maintain building. Sustainability is also very focused on the 15-minute city, travel, where's work, is there co-working spaces, is there flexibility in the community, access to recreation. So as I said, it's such a wide term. I think every developer needs to be stronger in how they define it, and we obviously need to leverage the consultant market and the feedback from customers about what they want. In relation to probably commercial development, the institutional aspects where more and more long-term investors are coming into that commercial market is actually driving more and more sustainability into those buildings, because those asset classes have to be improved. They have to be A grade to get the long-term institutions to come in and invest. So I think that's a positive in the market, and that means obviously the wellness certificates, lead certificates in Dubai, Estadama and Abu Dhabi. I think broader education of the community on what those really mean are, I think, in my own life, I think a closeness to nature and getting back to a more sustainable area where the landscaping, everything is around you and you feel a bit better is a key part of it as well. But as I said, it's such a broad term that I think the customers need to push the developers on defining it a bit more.
Obviously, people looking for more space, not just from green areas, but with the price per square feet going up, it's getting harder for developers to maintain the same size of units and not increase the price. Because one of the things we've been very good here compared to especially Europe, other places, is the size of the units. They've been very, very generous.
Correct.
But now I see that on new launches, they're getting smaller and smaller. I suppose for balancing the ticket price. How do you manage that?
It's a challenge.
Yes.
I think when I first moved over here from Ireland in 2008, I lived in Australia, I lived in London, I lived in Washington DC, so I'd seen a few other cities, but I was genuinely excited at the size of the apartment units in Dubai and the villa units. Now, over the last 17 years that I've been here, I've definitely seen a correction in that. However, I still feel that Dubai sizes are larger than probably a lot of Central Europe and Western Europe in those areas, so they're still more competitive in relation to an area for users. But I think it's a balance in relation to dealing with different types of customers. So the market in Dubai is changing, and as you mentioned, the asset classes and the interest in affordable, mid-market, luxury, we tend to follow from mid-market up to luxury. We've done some more affordable ones as well, but that would be where we would sit. But I think certain developers are very focused on luxury, others are more focused on the affordable market, and then you've got some of the wider ones and the bigger ones that can cover different asset classes. So it's going to continue to be a challenge, particularly with land prices going up and probably everybody trying to push the sales prices up. Construction prices are going up. So I think as a responsible developer, I think we all need to challenge ourselves to make sure that we keep a control of this, and we don't look to the short term. Dubai and the leadership here have always been very, very, very good on the long term and a focus on the long term. I think we need to do the same.
With so many developers in the market, how developers should differentiate themselves from other developers?
It's looking at the market you play in and looking at the customer segment you're focused on. There's an awful lot of new developers that have entered the market, and they're obviously trying to build their brands. So probably the launches they do will be very glitzy and glamour and a lot of extravagance. Probably the more long-term ones have strong launches, but are very focused on their history and what they've done. So again, we tend not to focus on what others have done too much. Obviously, you're aware of what's happening in the market, what the trends are, but we try to differentiate and focus on ourselves. The competition will always be there, and it comes down to the different type of investors and residents. We have a track record. We're very focused on at the moment both sales launches and delivery. We've got 5 projects delivering this year, so a big focus for us is meeting those commitments to the customers, handing over those quality units to them this year, and again using that to cement our brand and allow us to push forward for the next few launches next year.
Being associated with a bank, I don't know if that's still the relationship,
Yeah.
Dubai Islamic Bank. What kind of products DR and developers who are in DR category can give to investors to make Dubai real estate market more affordable?
One of the things that the recent announcement on changing of how much banks can lend in relation to DLD and that registration is actually a positive thing, because you can keep the market stable in relation to that. It makes sure that people who are investing have the cash, and it's more sustainable than people coming in who are taking massive loans and that. So I think the banks here are actually done very well. There's a lot of lessons learned from 2008, and I think where the larger developers can support in is attractive payment plans. Attractive payment plans is the best thing we can do to support the customer. We do have a strong relationship with DIB. They're our largest shareholder, but I think each developer needs to be able to understand their market and drive the attractions that support their customer base. So we see attractive payment plans as a very, very strong thing, that people are committed, but they have an affordable plan that can actually allow them to access the market. We don't want people trying to access the market. They're here for short term and then causing problems overall, like happened before.
The challenge is most payment plans, they are asking 70-80% until handover, leaving very little to finance. So people need to have the cash in order to be able. But that leads me to another point that you raised about commitment and delivery, right? A lot of people, they buy off plan with the view that I'm going to rent for the next 3 years and then I'm going to take possession of the property. Nobody's talking about it, but we should talk about it, which is delays. Pretty much every developer is delaying from 6 to 1 year, even beyond the handover of their properties. From a development point of view, what can you do to ensure that that doesn't happen? Because people now are making financial commitments. They're expecting the handover on a certain date, and then now they have to extend their lease or maybe even move to another place until they get the property.
From our perspective, we take our commitments on delivery dates very seriously. I'm not saying other people don't, but it's something that we need to pride ourselves on. Obviously, I think COVID had an effect on a lot of developers where projects did get delayed, and probably some of the projects from that period that are finishing now or just finished probably have just about recovered from that. And that's why I think sustainable growth is a very important thing, that developers really need to focus on what they're launching that they can deliver. And I think this is where the market has become more mature. The developers do focus on that, will be the ones that last.
But from a general point of view on construction process, right? Just for the audience to understand, normally where the challenge is because, for example, there's not enough contractors for the amount of developers. Is it a procurement challenge that sometimes takes longer?
I think there's a number of challenges. Probably some developers launching too early. So some of the developers that are probably not as cash rich or stable will launch very, very early in the design process. So they're probably making commitments that they probably are very, very aggressive and hard to meet. If you launch too early in the design process, you've still a lot more detail to get through. You still a lot more work to do on your budget to make sure you can do it. And with the market growing, if they launch very early, by the time they award to that contractor, they're already under pressure. I think the contracting element is a very interesting topic, because the contractor is going to be under pressure for the next 2 years. As you mentioned earlier, there's an awful lot of projects that are after been launched, and that's going to put probably pressure on the main contractors, the supply chain, the supply materials. So the way as a developer you can focus on that is make sure you're launching at the right time. Make sure you understand that once you launch, you have a commitment and understanding of your product, that you can get that design finished early and then get out to the market and get the contractor on site. But it's also developing the right relationship with the right contractors to ensure that you know who you're entering into a relationship and you know that they're capable of delivering, and you're able to support them in the right way. Probably a lot of new entries into the market at the moment probably struggle with those relationships and struggle to ensure that they can get people across the line. And that's why you mentioned probably the longer term developers that are here, they have those relationships, they've built that trust with both themselves and the contractors and their partners, so they're more assured and being able to get over there.
For the first time buyers, and what are the options, what are the products, what are the geography of Dubai that first time buyers still can afford?
There's definitely an area for first time buyers, particularly if you pay attention to the education sector. Education sector is a massive area of growth in the last number of years in Dubai, and it's going to continue to grow. I mean, the government is very focused on now bringing more third level education systems here. So with the regulations changing, long-term visas, better education, better working facilities, better accommodation, people are staying longer. So that's opening up more and more opportunities to that. And in relation to, sorry, I've lost my train of thought there.
No, I mean, in terms of geography, what are the options? What are the opportunities?
The opportunities for first-time entries are very much probably for Jan, JVC,
Dubai South?
about Dubai South, the Valley areas. They're very budget-friendly areas with high-quality projects, and allows them to enter into the market and be able to access probably all the better elements of Dubai, from both recreational areas, education, and close to the retail areas. So they're strong areas that are close to the city but more budget friendly.
For the final question, any bold predictions for the market into 25?
There's a number of interesting areas that are probably really stepped up. There's a lot more branded residences coming to the market. How that continues to evolve and what type of different products developers bring to the market. One area we're really looking at is differentiation of products. Even within the community, what are the different options we're offering to people, from both inner design with maids, closed kitchens, what do people want, flexibility within their units to change things. So more and more interesting products like that. I think there's a real drive probably the other areas in holiday homes. More and more people that stay here longer term are looking for a secondary holiday home here. So that's definitely something that's expanding in the other Emirates as they develop. They will benefit probably from Dubai and the ability and need for holiday homes. And I think more waterfront developments is something that there's a huge demand for. I think people will continue to drive to access those areas. But also I think I go back to that 15-minute city, the more and more developers can create those areas for work to live, easy access to co-working facilities, easy access to retail, really driving the community facilities with keeping an eye on the service charges. They're the ones that I think will start to really push to the investors in the next few years.
That's great. Patrick, CDO of Deyaar Development, thank you for being on the podcast with us. It was really very interesting. Thank you.
Thank you very much.
Thank you,
for having me.
Patrick. Thank you.